Namaste, dear students. How are you all? I hope you people are doing good and safe. So, as of till now, we are completed with the 9 problems. So, now I'm starting the 10th problem. So, this is also one of the different kind of problem because till now, whatever the problem we have prepared, that is purely about preparation of revenue account. Okay. So now in this problem, they have asked us to prepare a revenue account, a profit and loss account, and balance sheet. So all the three statements we have to prepare. So to prepare this account, you must know the format of revenue account perfectly, the format of P&L account perfectly, and the format of balance sheet perfectly. So if you don't know any of the one format, so then you cannot solve the problem. Clear? So by considering that, I know you have already learned the format of all the three sections. So that is revenue, P&L account, and balance sheet. So I'm going to start the problem. So illustration number 10 or problem number 10. So copy the problem since this problem is bit lengthy. So now only copy it to your notebook. So the following are the balances in the books of Fire Insurance Company Limited on 31st March 2006. You are required to prepare a revenue account, profit and loss account for the year ended 31st 3 2006 and the balance sheet as on that date. So he has given the details with particulars rupees column. So I'm starting with the debit side. Debit side, premium less reinsurance. Premium less reinsurance 37,50,000 rupees. Then we have reserve for unexpired risk. I am reading on the debit side. So reserve for unexpired risk as on 1/4/2005, 15 lakh rupees. 15 lakh. Claims less reinsurance 20 lakh 62,500 rupees. Claims outstanding on 1/4/2005, 5,62,500 rupees. Then we have commission on direct business 2,25,000 rupees. Then we have commission on reinsurance ceded 1,50,000 rupees. Then we have commission on reinsurance accepted 75,000 rupees. Then we have bad debts 11,250. Then we have taxes 7,500. Then we have rent and rates 90,000 rupees. Then we have establishment charges 3,75,000. Then we have audit fees of rupees 15,000. Then we have postage and telegram 11,250 rupees. Then we have printing and stationery 18,750. Then we have depreciation 30,000 rupees. Then we have policy stamps on hand 3,750. Then we have equity share capital 37,50,000 rupees. Then we have general reserves 7,50,000 rupees. Then we have P&L account balance on 1/4/2005, credit balance 1,50,000 rupees. So these are the items which is reflected on the debit side of the problem. So now let us move towards the credit side of the problem. So in the credit side we have amount due to reinsurers 6 lakh rupees. Then we have amount due from reinsurers 30 lakh rupees. Then we have cash in hand 19,500 rupees. Then cash at bank 9,10,500 rupees. Then deposits with RBI 15 lakh rupees. So after that we have government securities of 18,75,000 rupees. Then we have shares of other companies 7,50,000 rupees. Then we have interest and dividend received net 1,12,500 rupees. Then we have a director's fees, that is 15,000 rupees direct fees. Then we have remuneration to of managing directors 1,35,000 rupees.
Then we have sundry debtors rupees 3,75,000. Then we have sundry creditors rupees 1,50,000 rupees. Investment reserves as on 1/4/2005, that is opening 4,50,000 rupees. Motor car rupees 3 lakh. Furniture and fittings rupees 1,20,000. Apart from this, in this problem he has given additional information, that is adjustment. Additional information A, outstanding claims as on 31st/3/2006 rupees 3,75,000. Additional information B, reserve for unexpired risk is to be at 50%. So since it is a fire insurance, so obviously we keep 50% only. Next, additional information C, provide for taxation rupees 2,92,500 rupees. So this is the information as he has given, to solve the problem. So fire insurance final accounts, that is fire insurance we have to prepare. So let us look into the solution part without any further delay.
Yes, students, first we are supposed to prepare a revenue account in the books of Ag Fire Insurance Limited. So let us prepare a table for the same. Okay, so done with the table. So take the heading. First we are preparing which account? The revenue account. A revenue account for ag fire insurance company limited as on which date he has given? As on that date he has given. So that is 31st/3. Okay, 31st/3/2006. As on 31st/3/2006. Okay, 31st/3/2006. So now give the heading particulars, schedule number. Since it is a fire insurance, only fire insurance, amount rupees. Okay, so as usual you all know, first main, that is going to be an income. So under income we always have what? Premium earned, schedule number 1, premium earned, schedule number 1. Okay, so under that premium, write down premium. So check out in the problem how much premium they have given. So premium, first item, premium less reinsurance, first item on the debit side, how much? 37,50,000. 37,50,000. Add reserve for unexpired risk. Add reserve for unexpired risk. So how much reserve for unexpired risk, and we are going to add always opening. So reserve for unexpired risk, immediately on the below that he has given 15 lakh rupees. Add 15 lakh. 15 lakh, add both. So how much you will get? That is 37 lakh 50,000. 37 lakh 50,000 plus 15 lakh. 52 lakh 50,000, correct? 52 lakh 50,000. So that comes to 52 lakh 50,000. 52 lakh 50,000 less reserves for unexpired risk. Unexpired risk. So it is going to be a closing one. So closing we have to calculate, that is 50%. He has said in the adjustment. In fire insurance we normally give 50%. 50% of what? Net premium. So in this problem net premium is 37 lakh 50,000. So 37 lakh 50,000 into 50 divided by 100. So how much that comes to? 37 lakh 50,000 into 50%, 18 lakh 75,000. It is 18 lakh 75,000. So now deduct that 18 lakh 75,000 and find the difference. 52 lakh 50,000 minus 18 lakh 75,000. 33 lakh 75,000. That is 33 lakh 75,000. Okay, so this is, we call it as a total A, that is income. 33 lakh 75,000 is total A income. So now coming to the second head, that is expenditures. Expenditure. So under expenditure we always have what? Claims. So claims, under claims, claims paid. Claims paid. So how much claims has been paid? 20 lakh 62,500. That is claims less reinsurance. Claims less reinsurance. That is how much? 20 lakh 62,500. 20 lakh 62,500. Add outstanding claims. Add outstanding claims. So that is closing balance. So how much outstanding claims is there? Outstanding claims in the adjustment, first adjustment, 3 lakh 75,000. 3 lakh 75,000 less outstanding claims opening. So let me mention closing, that is adjustment, and opening will be always in the statement. So check out outstanding adjustment, how much outstanding claims? 3 lakh 75,000, right? That is opening. Opening outstanding claims It is there in the problem. Yeah, opening. Claims outstanding. Debit side. 1, 2, 3, fourth item. Fourth item. Outstanding claims 1 4 2005. 5,62,500. 5,62,500. Since it is a deduct, so I am writing it in a bracket. Closing this and writing the total in the next line. So that is going to be total of schedule number 2. 20,62,500 plus 3,75,000 minus 5,62,500. That comes to 18,75,000. 18,75,000. So this is going to be a total of 2. That is schedule number 2. Claims is schedule number 2. Okay, so next we are moving schedule number 3. So schedule number 3 is always commission. That is schedule number 3. So commission paid, commission outstanding, that we have to check. So next is commission on direct business. So write down commission on direct business. Commission on direct business, how much? 2,25,000. 2,25,000. 2,25,000 rupees. So next is add commission accepted. Add commission accepted. Add commission accepted. How much commission accepted he has given in the problem? Check out. Add commission accepted. It is there in the problem. Commission accepted. Commission on reinsurance accepted. Commission on reinsurance accepted 75,000. So 75,000. 75,000. Next, less outstanding, ceded, less commission ceded. Commission ceded. Commission ceded. So how much commission ceded he has given? Check out. It is there only. Above that, reinsurance accepted. Commission on reinsurance accepted. Above that, commission on reinsurance ceded. That is 1,50,000. So commission on reinsurance ceded is always minus. So you have to deduct. So now add, deduct 2,25,000 plus 75, 3 lakh. 3 lakh minus 1,50,000. That comes to 1,50,000 rupees. So 1,50,000 rupees. 1,50,000 is the total of schedule number 3. Next, operating expenses. Operating expenses. Usually operating expenses means schedule number 4, which we used to get. So which we used to get, that is management expenses, that kind. So now check out, is there any management expenses has been given in the problem? So just check out once before going to that entry part. So I think I didn't find any kind of management expenses or outstanding management expenses and all. So that is, we are marking it as a nil. So the total of this also nil, schedule number 4 in this particular problem. Okay, so now we are done with operating expenses part, that is schedule number 4. So next what we are supposed to do, we should total B. We have to do the total B, that is 2 plus 3 plus 4. So 2 plus 3 plus 4, that is 18,75,000 rupees. 18,75,000 plus 1,50,000. Then nil we have, so that comes to 20,25,000. Total B is 20,25,000 rupees. 20,25,000 rupees. Okay, so this is total expenditure. See, in this problem, total income 33,75,000 and expenditure is 20,25,000. So the business is under profit. So let us write operating profit, that is A minus B. So that means 33,75,000 minus 20,25,000. Check out how much you will get. 33,75,000 minus 20,25,000. So you will get 13,50,000. So that is 13,50,000 is the operating profit. Operating profit. So we are done with this revenue account of Ag Fire Insurance Company. So it is very easy revenue account whenever he gives such kind of lengthy problem. Okay, so now let us prepare profit and loss account. Okay, so let us prepare the profit and loss account in the next sheet. So I think you all know that how to prepare P&L account. So as usual, two columns, amount columns, that is this schedule column need not to be there, but let it be so that you don't get confusion while preparing this. Okay, so let us start the solution part. So which account? Profit and loss account of Ag Fire Insurance Company Limited as on 31st/3/2006. So write down the heading, that is particulars, schedule number we don't write here. Then we have amount rupees, amount rupees. Okay, so shall we start? First one, operating profit. So how much we got operating profit from preparation of revenue account? Operating profit from revenue account. So that is 13,50,000 rupees. How much? 13,50,000. So I am taking that 13,50,000 rupees directly here. 13,50,000 rupees. So after this, whatever the expenditure or any income that needs to be added here. Okay, so that to be added. So write down, add other incomes. Other incomes. So what are all other incomes do you have? Obviously other incomes, that is interest, dividend, profits. So those. So is there any such kind of item? Just check out. There is one item, that is interest and dividend, which he used to give normally. I think in this problem also he has given. See, that is on the credit side, interest and dividend received net. So he has given on the credit side, interest and dividend received net, that is below government securities, 1,12,500. So I'm taking that 1,12,500. So rest all that won't come here. So only interest and dividend is a income. So I'm totaling this. So that is 13,50,000 plus 1,12,500, 14,62,500. That is 14,62,500. So we call it as a total income as A. Total income as A. Okay. So next we have to take all the expenditures. Okay. So let us take expenditures. Expenditures. So under that, the first item I am going to take one by one. Just check out one by one. So first will come from the debit side. So we have already taken what premium on reissued. I'm coming from the debit side. Look at the question. Premium less reinsurance, then reserve for unexpired risk claims. Then we have commission on direct, that is also over. Commission on reinsurance over. Commission on reinsurance accepted over. Bad debts. So how much bad debts that you need to take. Okay. So bad debts. Bad debts is 11,250 in the problem he has given. I have taken. Then we have a taxes 7,500. Take taxes 7,500 rupees. Then we have rent and rates 90,000 rupees. Take rent and rates, that is 90,000 rupees. Take down. Then we have establishment charges. Take down, it is expenditure. Establishment charges. So that is 3,75,000. Take down 3,75,000 rupees. Then we have audit fees 15,000 rupees. Take directly audit fee. How much? 15,000. So take directly 15,000 rupees. Then we have postage and telegram 11,250. Take postage and telegram 11,250, right? Take down 11,250 rupees. Then take printing and stationery 18,750. That is printing and stationery 18,750. 18,750. So then we have depreciation 30,000. So take depreciation how much? 30,000 rupees. Take. Then we have policy stamp on hand 3,750. See, policy stamps on hand 3,750 rupees. Policy stamp on hand 3,750, that we don't take here. Then equity share capital 37,50,000, that is a balance sheet item. General reserve balance sheet item. P&L account 1,50,000, that also won't come here. Okay. So next I am moving on to the credit side. So amount due to the reinsurance, amount due from reinsurers, cash in hand, cash at bank, deposits with RBI, these are all balance sheet items. then government securities, the share of companies, interest, dividends that we have taken, directors fees 15,000 is there that we need to take here. So directors fee 15,000 rupees, directors fee 15,000 rupees, then remuneration of managing directors 1,35,000 you should take. Remuneration of managing director of managing directors 1,35,000 rupees, 1,35,000 rupees. Okay. So next, after sundry data, sundry creditors, investment, motor car, furniture and fittings, those are all balance sheet item. I think that's all expenditure we have over here. So now total this that is 11,250 plus 7,500 plus 90,000 plus 3,75,000 plus 15,000 plus 11,250 plus 18,750 plus 30,000 plus 15,000 plus 1,35,000. So that comes to 7,08,750. That is 7,08,750 rupees, the total of this. Okay, 7,08,750. That is, we can say this as a total B. Total expenditure B. Okay, so next, profit before tax you have to find, that is A minus B, profit before tax. So now we know total expenditure, we know total income, so this minus this, so that is 14,62,500 minus 7,08,750, so that comes to 7,53,750. So 7,53,750 rupees profit before tax, A minus B. Okay, so less taxation, so how much taxation which has been given in the problem? See, adjustment number C, provide for taxation rupees 2,92,500. So provision, that is provide for taxation 2,92,500. So taxation is 2,92,500 rupees. 2,92,500 rupees. So deduct that. How much you will get? 7,53,750 minus 2,92,500. 2,92,500, that is 4,61,250. 4,61,250. So this is, we call it as a profit after tax. Profit after tax 4,61,250. Okay. So next, add opening profit. Add opening profit. So he has given at the last item on the debit side in the trial balance, P&L account balance as on 1/4/2005, credit balances. So that is 1,50,000 rupees. So that we need to add. So 1,50,000 rupees. So now add these two. 4,61,250 plus 1,50,000 rupees, that is 6,11,250. 6,11,250. 250. Okay, so we are done with the P&L account. So let us transfer this surplus transfer to balance sheet. Surplus transfer to balance sheet is 6,11,250. Surplus transfer to balance sheet is 6,11,250 rupees. Okay, so we are done with this P&L account. So further I'm moving on to the preparation of balance sheet, the final stage of this kind of problem. So that is balance sheet, preparation of balance sheet. So let us prepare a table for preparation of balance sheet. So table, I believe you all know that. Again, I need not to explain on the table part. One. Okay, fine. So the heading for this, it is new balance sheet. New balance sheet of ag fire insurance. Ag fire insurance company limited as on 31st 3 2006. 31st 3 2006. So here we are going to write heading as a particulars, then we have a schedule number, amount rupees, amount rupees. So under that, first always we write sources of fund. So sources of fund means from where all we have arranged the money for the business purpose. Okay, so in that we have first item share capital, schedule number 5. So how much share capital checkout he has given in the problem. So that is on the debit side of the table, third item from last, 37,50,000 equity share capital, 37,50,000, 37,50,000 rupees. Okay, then we have reserves and surplus. Reserves and surplus, schedule number 6. So here we write all kinds of reserves and surplus, whatever it is there, so that we are going to record. Okay, that we are going to record. So under that, take down general reserve. General reserves. How much they have given general reserves? Check out in the problem. General reserves 7,50,000 rupees. I think second item from last, that is exactly below equity share capital, 7,50,000. So I'm writing that as 7,50,000 directly in inner column, 7,50,000 rupees. Next, add surplus. Add surplus, that which we have identified in the profit and the loss account, and we have transferred that amount. Okay, so that surplus transfer to P&L account, 6,11,250 rupees surplus transfer to balance sheet. So that exact amount I am writing here, surplus 6,11,250. Okay, then add any other reserves it is there. Check out investment reserves as on 1/4/2005. On the credit side, last third item, credit side, last third item in the table, investment reserves as on 1/4/2005, 4,50,000 rupees. So write down investment reserves. Investment reserves. So that is 4,50,000 rupees. 4,50,000 rupees. Done. So next, after that, we have unexpired risk closing balance. Add reserves for unexpired risk. Reserve for unexpired risk closing balance you have to write. So how much it is there? Reserves for unexpired risk. That is nothing but closing balance of reserves for unexpired risk. Check out in the revenue account, you will get it. Reserves for unexpired risk, revenue account. In revenue account, we will have that. That is 18,75,000. Correct. See, reserves for unexpired risks, 18,75,000 rupees. That is closing, 18,75,000. So that we have to take care. So reserves for unexpired risk, closing balance. So you can write, if you want, it is from revenue account. I have taken it from revenue account, 18,75,000. I think that's all come under this head. So now let us total this. 7,50,000 plus 6,11,250 plus 4,50,000 plus 18,75,000. So put together 3,68,000. Sorry, 36,86,250. 36,86,250. Okay, so if you have any borrowings, that also you need to add. So borrowings, check out any borrowings. No. So there is no any borrowing. So I'm marking it as a nil. Now I'm totaling this. That is 37,50,000 plus 36,86,250. 74,36,250. 74,36,250 rupees. Okay. So now let me keep it like this. So let us move further. So next we have to write application of funds. Application of funds means what are all the assets we have, where all we have invested the funds. So applications of funds. Applications of funds. Application of funds. So application of funds. So in that, first one is investment. Investments schedule number 8. Investment schedule number 8, and this borrowings is schedule number 7. Okay, so investments schedule number 8, that is deposits with RBI. Deposits with RBI. So how much deposits with RBI? Check out. deposits with RBI. Investments, deposits with RBI. Deposits with RBI. So deposits with RBI on the credit side of the table. Fourth item, I think. No, 1, 2, 3, 4, fifth item. So how much deposits with RBI? 15 lakh rupees. So I'm writing that 15 lakh rupees deposits with RBI. Okay. So after that, any government securities or such kind of things if we have, so that we have to write. So that is, we have invested, right? Government investment or securities. Government securities. That is what he has given. Government securities. How much? 18 lakh 75,000. Below that RBI. That is deposit with RBI. Below that exactly 18 lakh 75,000 rupees. So after that we have shares of another company, that is other companies. So that also as an investment. Shares of other companies. Shares of other companies. How much? 7,50,000 rupees. So write down 7,50,000 rupees. Shares of other companies, 7,50,000 rupees. So any other investments if we have, if you can write. So as of now, that's all we have, that is investment part. So I'm totaling it. So check out what is the total. 15 lakh plus 18 lakh 75,000 plus 7 lakh 50,000, that is 1 crore. Sorry, that is comes to 1 crore 1 lakh 25,000, not 1 crore. I think I have done the calculation mistake. I'm sorry. 15 lakh plus 18 lakh 75,000 plus 7 lakh 50,000. Yes, 7 lakh 50,000. That comes to 41 lakh 25,000. 41 lakh 25,000. 41 lakh 25,000. I have added 10 here extra, that is why it went crores. So be careful while calculating. So 41 lakh 25,000. So next is loans and advances, schedule number 9. Loans and advances, schedule number 9. So any loans, any advances, if we have that we can mention. So since there are no any loans and advances, it is going to be nil. Next we have fixed assets. Fixed assets. So that comes under schedule number 10. Schedule number 10. Okay. So what are all the assets we have in the business? That all we should record under this. So I believe you also know which are all fixed assets. So check out. So from the last one in the credit side of the table, furniture and fittings is there. First I'm writing that. So furniture and fittings. Furniture and fittings. So how much amount he has given? 1,20,000. So I'm writing that 1,20,000 rupees. Then we have above that immediately motor car. Motor car we have worth of 3 lakh rupees. So 3 lakh rupees motor car. So that's all. So total it, put it to outer column. So that comes to 4,20,000 rupees. 4,20,000 rupees. Correct. So next we have current assets. So current assets, under that it is schedule number 11. Make a note, schedule number 11. So in that we have cash in hand first. So let me write cash in hand. So how much cash in hand we have? Cash in hand. How much? Just check the table. Cash in hand, cash at bank and all. Yeah, credit side of the table. Third item, 19,500. So 19,500. Then I have cash at bank. So how much cash at bank we have? Check out immediately next to after that, 9,10,500. 9,10,500. So that's all. Let me total it and put it to outer column. So that comes to 9,30,000. Correct. 9,30,000 rupees. Next, other assets. Other assets. So that is schedule number 12. Schedule number 12, other assets. So that comes under policy stamp. The first one is policy stamp. Policy stamp. How much policy stamp we have? Other assets. So that is 3,750, right? Yes, on the debit side, 3,750. So next, if we have any other assets like sundry debtors, we have how much sundry debtors? 3,75,000. So write down sundry debtors 3,75,000. 3,75,000. Next we have other assets like amount due from reinsurance. That is also an asset. Amount due from reinsurance. Correct. Write down amount due from reinsurance. Amount due from reinsurance. How much we have due from reinsurance? So that is second item on the credit side of the table, 30 lakh rupees. So that is 30 lakh rupees amount due from other reinsurance. So that comes under other incomes. Now total it, 3,750 plus 3,75,000 plus 30 lakh. That comes to 33,78,750. So I'm writing 33,78,750. Okay. So now let me write total A, that is 11 plus 12. That is only current assets and other assets I am totaling. So total current assets is 9,30,000. Total other assets 33,78,000. Okay, so I am just adding this two. Remember, I am adding only this two. So that is 9,30,000 plus 33,78,750. So 9,30,000. Put together 43 lakh 8,750. 43 lakh 8,750. So this is the total of these two. You should remember 9,30,000 and 33,78,750, because these two comes under current assets only. That is other assets and current other assets and current assets will be comes under current assets. So 11 plus 2 I have clearly mentioned total. So after that we have to write current liabilities. So let me write current liabilities. Current liabilities. Current liabilities always comes under schedule number 13. Okay, schedule number 13. So under that, first one, outstanding claims. So how much outstanding claims they have given? Check out. Outstanding claims they have given 3,75,000. Correct. Adjustment number 1, 3,75,000. 3,75,000 rupees. Okay, so let me close this so that you don't get confusion. 3,75,000. Next, creditors, that is sundry creditors, which he has given on the credit side below the debtors, that is 1,50,000. So 1,50,000 rupees. So next, amount due to reinsurers. If we are supposed to pay any amount due to reinsurers, so how much we are supposed to pay them? Amount due to reinsurers. Check out in the problem. So how much he has given in the problem? Amount due to reinsurers, first item on the credit side, 6 lakh rupees. 6 lakh rupees. Okay, so that's all. Total these three now, 3,75,000, 1,50,000 plus 6 lakh. So that comes to 11,25,000. So let me reconfirm with the calculation. Calculator, 3,75,000 plus 1,50,000 plus 6 lakh. That is 11,25,000. 11,25,000. So next, provision for taxation. Provision for taxation. How much they have given? Provisions for taxation, 2,92,500. Correct. Adjustment number C, 2,92,500. Adjustment number C. So now schedule number 14, this is schedule number 14, provision for taxation. Okay, so now add this to 11,25,000 plus 2,92,500, that is 14,17,500. 14,17,500. 14,17,500. Okay, so by adding these two, so that is total B. This is total B. That is the total of 13 plus 14. As we did current assets, so we are doing current liabilities. So that is the total of only these items. Okay, 13 and 14. So now net assets. Now net assets A minus B. A minus B, that is A, this is B. So that is 43 lakh 8,750 minus 14,17,500. That comes to 28,91,250. 28 91,250. 28,91,250. Okay, plus 1000 plus 41,25,000. So now you have to add the balance sheet value. So close this. 74,36,250 rupees. This one. This is the sources of fund. 74,36,250. So now let me total 41,25,000 plus 4,20,000 plus this we have already calculated. This one 28,91,250 plus 28,91,250. That comes to 74,36,250 rupees. 74,36,250 rupees. So that 74,36,250. 74,36,250. So the balance sheet got tallied. So to look this problem, you will feel it is very much difficult and you cannot solve and you cannot able to understand and all. So only problem is you have not yet learned the format of P&L account and balance sheet of general insurance companies. So if you are well versed with the pro formas or format, so you can solve it very easily because we have not done any other additional calculation. We have just copied the question and pasted to the solution on the schedule number basis. So that's all. So it is very easiest. Practice 2 or 3 times so that you will understand it properly. Okay, so we are done with the problem. So I'm going to stop here. So I'll be back very soon with one more problem. Till then, take care. See you soon. Bye bye. Stay safe, stay home, take care of your family members, take care of yourself, and be a positive vibe spreader. So create positive atmosphere so wherever you are present, and stay safe, stay home, take care. Bye bye. See you soon with one more problem.